Hello. Happy Thursday, everyone. Sorry for the earlier start. It will be back to the normal time tomorrow. As some of you know, I have some personal family stuff going on, which again has to trump the live stream. Again, you see what's going on. I had to disappear for a couple minutes in the middle of the live stream yesterday, so I apologize. I'm not expecting to disappear today, but I will be wrapping it up well before 8 o'clock to deal with stuff. So thank you for tuning in. Thank you for sticking with me. I figured it's better to do something than not have anything put out if you find this helpful. You know, if you find it helpful, also give it a like, share it with people. You know, we don't sell anything here right now. Good morning, Patrick. Good morning, Jacob. That's your explanation of why it's early. It'll be back normal time tomorrow. But I try to get this up. If the time's going to change, I'll try to get the video up early so it should pop up in your feed if you are subscribed and hit the ring the bell for all notifications. You'll see when it's going to kick off. Good morning, Anissa. Anytime is great. Thank you, Jake. Thank you. I really appreciate everybody supporting the channel. It's been a little rough over the summer. Again, dealing with stuff. Hopefully we'll get that all wrapped up shortly. All right. Well, let's see. It's 7:30, so we have some numbers that just came out. Chicago Fed National Activity Index actual jump up from prior. Continuing jobless claims. Let's see. Forecasts 1708, previous 1711, 1702, so it's a little slightly better. Core durable goods orders coming in better than forecast by a fair amount. Overall, month over month, just the overall broad durable goods orders down, though. So that's mixed. Cores up, broad is down. Excluding defense is down 5.4, so roughly in lines with the broad index. Initial jobless claims better than expected. So it's pretty, jobless claims better. Durable goods mixed. What else do we have today? Let's jump to the other one. What else? Besides the big thing, Jackson Hole, we're going to get speeches. We already had, I forgot. Was it X? The X Bullard was talking already. What else we have? We have Kansas City Fed composite manufacturing, very minor right there, and then nothing else. And so Jackson Hole is going to dominate the next 2 days, especially with Powell, or next day and a half with Powell speaking tomorrow morning. And we got consumer sentiment and inflation expectations. Big news is that was a pretty strong beat by NVDA, but some of these companies who raised the price target on it to 1,000. It's getting absurd, but you see the mega caps besides Apple trying to bounce or lead the market higher. We had the percent B buys, got a little pausing pullback on Tuesday, resuming the rally on Wednesday. So from my perspective, it's still in trailing mode from a fairly tight level, as I talked about yesterday. And we'll go over the key levels I'm still watching to widen out the trailing levels, but technology, comm, services, consumer cyclical, so it's definitely a more risk-on day. Going to chase the technology, communication services, and consumer cyclical stuff today. FedWatch tool, I doubt it changed much. It's still the best probability for a rate hike, which is still below 50, is set for November. And that climbed a bit after the numbers came out to 40%. So again, pause in September. We still only have a 40% probability of the rate hike in November, but overall the probabilities are pause and then a cut next May. Fear and greed in neutral mode. So, in terms of earnings, also Snowflake did better than expected yesterday. Dollar Tree was a beat, but their guidance is going lower. They're getting a lot of shrinkage, so they're losing a lot of money on theft. And they're actually somewhat positioning to welcome some of the little stronger consumers that are starting to shop down at Dollar Tree because of inflation. But Dollar Tree a big gap down. Who else is coming in? I'd have to look it up. Somebody gave NVIDIA $1,000 price target. It's absurd. It's absurd. I mean, NVIDIA had strong earnings, but to give it $1,000 price target is absolutely absurd. Sorry, just having to have a little sip of something. The mouth's a little dry. All right. So, as I said, we got the short-term buy. We're on day, well, if this is a trigger day, one, two, third day up. This is, if it's against the rotation zone, it generally lasts about 2 to 3 days. The S&P, I still need in order to give it more room to tackle the most recent swing highs. I need a close above 45.28. That level's still the same. I'm watching this flagging pattern, but your key support, your first level support going in the open is 44.57. The major support area is back at the 44.38, which was the resistance area yesterday, on Tuesday. And then we blew through it yesterday and just pulling back. So watch 44.57 going into, and then if we have a backfill into the clear path, you can really watch about 44.38 to about 44.30. That would be my support zone. I'd actually have a key support zone. You start breaking down below that, you'll also break the channel going up. So that would still be an orderly pullback. What are the next key resistance levels? I am watching from, let's go back to the daily, from the swing high at the end of July to the swing low on the 18th, the 50% harmonic. 44.92, 44.93 area. If we push up and hold this going into the open, that's going to be my first target today. Then 45 to 45.06. And remember, I doubt unless we had some kind of monster day today. Again, it's 45.28 on the closing basis to continue. Otherwise, I will be watching, especially if we tag this 44.93, I'm going to start watching for topping patterns going into tomorrow. We're getting daily cycles back to the topping area, but not rolling over yet. So that's why I'm saying it's still, from my perspective, in a trail mode. Because before, weeklies really bottom. Now, we get that close above 45.28 with weeklies turning up. I will definitely be looking for a retest of the most recent high area. And the longer term people, I'd be targeting 45.99 because that'd be the 87.5, and then the 46.35. But that still needs to prove itself out some more. Good morning, Amit. Check that link out already. Thank you. Hey, good morning, Options 22. Good morning, Alan. So, curious, get your thoughts on Jackson Hole. Do you think the Fed will take a victory lap or shout down the market? I think it's Powell's. The big thing is Powell tomorrow. I think he's still going to keep the market on its toes. And saying we're still data dependent. If inflation doesn't keep its receding path, we're still going to have to keep potential hikes on the radar screen, and the pause is going to go on longer than expected even if we don't hike. I doubt he wants to give anything that's going to rejuice up this market. Hey, Eric, thank you for tuning in. We'll have to look at stuff. I'll have to look at it tomorrow. I am really on a tight schedule. Good morning, Sterling. Enphase. I'll have to look at Enphase. Those are the microinverters with the solar on my house. They make really good microinverters. So, I love my solar, by the way. Fantastic. Already banked enough energy through December. Because Illinois has net metering, so you get 1-for-1 excess credits. Fantastic. Only a 3-year break even on solar here for me. 3-year break even. So, let's see what we're sitting at. Let me just take this off. Again, we're into that zone on the NASDAQ. We got above 15,336, which is support. Next support, if we do break down, 15,268 is another area I'll watch. And major support, I'm raising this level up to around, let me find a little key area in here, right around 15,158, 15,160. We start breaking below that, we'll have broken the channel, we'll probably have broken the rotation zone on the 4-hour basis. So that's what's key. Now, we could get a very strong push based off the pre-market stuff if we take out this 15,420 area. My next target's 15,500 to 15,517. There's a fair amount of resistance up here. A close today above 15,517, and I am not going to ignore the 75, 15,699. But overall, I'd be watching for the trailing at least to 15,877 on a wider trailing basis. And that's only after I get a close above 15,517 or 15,518. If we look at the daily, so it's got some pretty heavy lifting to do. You see that 62.5 is also the prior breakdown zone, which was the little double area. So that's where it sits. You know, that's where, I mean, we're on day 3 of the bounce from the percent B buy on the break above Monday's high with the follow through close, or the break above Friday's high with the follow through close on Monday. So Dow has not been able to get any traction. This is a perfect example so far of a sideways correction. These two, S&P and NASDAQ, were retracement corrections so far. The Dow is a perfect example of a sideways correction. So far, it's got not a lot of traction. The key support area is still this 34,300. We break below that, you're still into a clear path move, 34,140, then about 33,950. But this so far has not been able to get any traction. Key resistance is still this 34,650 area. You see selling pressure from Friday, selling pressure from Monday at that area, selling pressure from Tuesday. Couldn't even reach there yesterday, and so far falling just short. That's key. If it does break through there, you have the hooking over 50, about 34,750, and then the rotation zone, 34,887. At this point, you know, the Dow has been the weakest, but it's going to take, the only way the Dow's going to get a stronger bounce is if we start getting some selling pressure in tech and people rotate in. Russell has pretty much been a sideways correction too. The only way I'll watch short term for a more bounce is above 1881 with a key target of 1906. Major support, 1855. You see buying pressure 4 days in a row right there. And the 200. You break below that, I would not want to be, especially if you break below it and close below it on a daily basis. I just look at the 1850 on a daily closing basis. You close below that, I would not want to be long the Russell. Would not. Because then it's sideways correction broken down. You see the major support from this 200 area, that would be broken. And it would be a pretty quick trip to take out possibly Friday's lows, which were reinforced at the end of June and the beginning of July, and then it's watch out in the Russell. VIX, breaking the trend line, coming back down to key support. For this rally to continue, I'm really watching now the 1480 to 15. Because if we start getting the VIX dropping below that 15 level, and especially below 1480, you will probably see the continued rally, and we'll go get those key closes above the 62.5. If the VIX starts, I mean, we could get on a minor pullback, you'll get a minor rally in the VIX, but unless the VIX gets back above 17, if it does pop above 17, I will be positioned more so for a bigger pullback, and the rally, the corrective rally, will most likely be over. The DAX, which does not have a little double anymore, but I'm watching for, it's not been able to get through the rotation zone so far today, watching for a retracement back down. The support level I'm really keying off of is right around this 15,650 area. The only thing, it would have to break back through 15,925, and then I'd be watching closer to the 16,000 level for another rollover play. We had a strong rally in the notes yesterday, but a return. I'm going to see if we form a stronger bottoming pattern down here. I am keeping an eye if we do have a sloppy inverse head and shoulders. And that would have to be traded with the flat neckline rules, and it's a lower probability one. That's the only thing I'm watching, because remember, the notes are trading against some very, very key support level from last October. If these lows break, it'll get very interesting for the markets. You also see the 10-year yield pulling back into the rotation zone. I'm watching for the opposite in the 10-year yield. Rallied up. This would be, I can't even use a horizontal neckline. It's too steep an angle down. So I'm just watching to see what kind of price reaction this gets on the yield and whether it can get back above 429. That's what I'm watching there. 10-2s are still pausing, pulling back off the little recent areas, but building a higher base so far here. Dollar, interestingly enough, pulling back yesterday, getting some selling pressure coming in. Remember, this is a key resistance zone, but look at today. Yesterday could not fall back in the channel, still holding above the 200, still holding the daily rotation zone. This was a key support area and bouncing strongly today. Weakness out of the euro a little, and the stuff's looking there. The sloppier head and shoulders, which actually made it a little stronger pattern yesterday. Slightly stronger still, holding the 50, but we dropped below the 50. 76.50, 75.14, 79.29. We could get the hooking over rotation zone. The only thing that I'm watching to see if we get for bullish price action now is if we start breaking above the defining point here. The defining point is very key on this little trend line, 81.75. Other than that, I will still watching for a steeper pullback, because we still have weekly cycles coming down. All right, so we still have some downwards pressure, and from a daily perspective, we are still trying to get back down to this daily low area. I'll get more interested if we especially come back to 76.50 at least and get some bottoming price action. But until that happens, nothing. Gold, a little pause here, but we start moving back above 1955. It could get interesting for the bullish gold case, and I need not a close above 1970. Let me get through 10-year. JGBs pulling back, easing up a little pressure here. So coming up to the harmonic level, pulling back. But I'll be watching to see if we get another rotation up. The yen against the rotation zone on the day. Oops, where is it? This one. There we go. Against the rotation zone on the daily. Triggered, remember, those are the lower probability ones, but if we close above 145.95, the double's off and it's turned into a flagging pattern. So that's what's key now. So it's just a pause, and that's why this is the probabilities drop slightly against the rotation zone, because you can catch on the rotation zone and rotate back up. So you got to be nimble. Right now, it looks like it's going to break out from the flagging pattern. If that happens, 147.30 is the next target. Euro, we retested the 200, bounced a little, and now rotating back down. The key level I'm watching for is 107.80. A close below 107.80 would be a close below the 200, which would be the first close back below the 200 since really since December of last year. Would also take it below the 62.5 and would close below this ascending channel. So that's key. And then we could see easily a retest of the 105 area. So pay attention. It has no real strong bullish setup just yet. We might get some really sloppy double down here, but we'll take a look at that tomorrow. It's pound. Triple bottom. If this area breaks, look at that 62.5. If you get the close 126.20, I'm then would be targeting, from my perspective, the 200 area, and that's also, look where the 87.5 harmonic is. Same virtual area. So that's what I would personally use for targets for structuring a trade. Again, not trading advice, educational purposes only. Bitcoin triggered a little double so far and hit the stop reduction, and no more follow through after the first target hit, but that's the only thing. Again, the lower probability since it is going into the rotation zone, but the next major target, even on a bounce back, would be 27,260, and then I'd be watching for more of a rollover play. Keep in mind, we still have the massive potential double top. That's not confirmed or triggered. Let's just peek at NVDA. It's pulling back from its pre-market. I'm really going to be watching this 500 level. 500 level. Not only is it a harmonic, it's the 500 level for support. If it breaks back below there, remember you have a pretty hefty gap at 40. This is where I use the harmonics on a backfill basis. 490.38. The next key target, if this goes on a rip into the open, is 522.84, so 523. Tesla, the key area is really this 245, and it could be making a little mini potential double top, so I'm going to keep an eye on that, but we'll see if that forms going into tomorrow. Other than that, I'm watching for a rollover play. The spiders, 446.23. Okay, 446.23 will be the first target on a rally, and then let's see. Then the next key area would be about 448, then 449.53 on a closing basis. Those are all the upside targets. On a pullback basis, we're trading 445 roughly now. 444 to about 443.70. And then it would be the gap fill. Then it'd be the gap fill to 443.03. Your major support coming in, you see right here, is 441.16, 441.20. You start breaking back below 441.20. Uh-oh, in the spiders. The Qs. Cue the Qs. Cue the Qs. All right, 372. Let's put on our reverse harmonics on the Qs. It's above 371.35, so that's going to be support. 371.35, then yesterday's high, 370.22, then yesterday's close, 369.11. If it did drop below that, you have a very key level at 366.40. Those are all your support levels. I will be watching for the continued rally. 375.50 is the next major target. The minor target is right around 374. Then 375.50, it closed above 375.50, which is also the key breakdown zone you see over here. And that's the 62.5 rule. So then we would be focused on continuing higher prices. All right, that's where that sits. Hey, Pep, thank you for tuning in. You're welcome, Eric. Let's just end phase real quick. End phase after completing the double and completing the 87.5 is in a major support zone. So on the bigger picture for end phase, I'd be watching anywhere down between about 120 and 112 for a bottoming pattern. If you do not get it and you break below 112, not good. And that would be a short-term bottoming pattern for the time being. If you break 112, I would not want to be long this stock. Remember, this is the weeklies. If you get any bounce, it's going back into the weekly rotation zone, and look where the 200 is. Look where the 200 on the week is a very powerful resistance level. And look at this prior support that was broken. So you have the middle of the rotation zone, the 200, and this key just price action target. So if you are trading anything to the long side, 159 is very, very key. But there is no strong bottoming pattern yet. And you're going also against the daily rotation zone. This does not have a strong bottoming pattern yet. So I'd be patient from the bullish side. And then let me just get SEDG, and then I got to run. I do not look at this stock very often, as you can see. This is another one. Wow. This is another one. It's broken all key support. It's holding on to a last little. Any bullish plays, I don't see anything yet. But anything on the bullish side would be for a bounce play only. You see also it's broken below your major support levels. All the support levels. Look, I mean, so any bounce would be back into the rotation zones and into key prior support becoming resistance. So I would not be overall. I'd find better things to play on the bullish side rather than these unless they form some stronger bottoming pattern. And from this move from the COVID lows, we're back below the 62.5 also. So we could easily see over the next few months a return to 107. So again, nothing long term for this from a technical basis. All right, I'm wrapping up for now. I've got to run. Thank you for tuning in. Tomorrow, back to the regular time. Remember, watch out for any headline stuff coming out from Jackson Hole. Powell speaks tomorrow morning, but anything can get, if it catches the market off guard. And also watch if NVIDIA does break down, you watch for those key support levels in the NASDAQ and S&P if you get some selling pressure in NVIDIA. If NVIDIA goes on a rip higher, then, continue watching those trails going up from the bullish case. I'll talk to everyone later. Bye for now.